What's up? Welcome to my podcast. This is Sunny Fonseca with Mortgages with Sunny. Today we're going to be talking about first-time home buyer loan programs. I have Rachel here today with us as well, who is in process of buying a home, and she has a couple of questions. Welcome, Rachel, to the show.
Hi, thank you for having me.
Awesome. So happy to have you. Thank you, and I'm so proud of you to start your journey in home ownership. And, I'm here to answer any questions that you may have. And thank you for sharing your experience as well, too. So welcome.
Definitely.
Let's get started.
So I do have a couple questions that I feel like would be beneficial for any home buyer to know and be aware of. And I guess it can just start simply with, what are my options? What type of loan products are there for me to take advantage of?
Yeah, definitely. So typically there's only two types of loan products. There's FHA and conventional. FHA, and conventional are kind of similar to one another. However, FHA allows you to qualify with a lower credit score and more of a purchase price. Now, conventional also is a great program. It's a bit more restricted as far as credit score is concerned and the amount of how much you can qualify for. Now, both of these programs you can use as a first-time home buyer. So FHA requires a 3.5% down payment, and conventional requires, as a first-time buyer, 3% down payment. Now, everybody has this assumption of FHA, it's a first-time home buyer loan program and things like that. So technically, you can use FHA as long as it's your primary home, okay? So you become a first-time buyer every 10 years, okay? So you can utilize these loan programs after 10 years, okay? Now, the difference of the two, because FHA allows you to qualify with a lower credit score, it has something called mortgage insurance, okay? And mortgage insurance is on every loan, except the fact that FHA has it for the life of the loan, and it's a little bit more expensive because FHA is a bit more riskier. And conventional has it, but it drops after 10 years or once you receive 20% equity on your home, okay? So you can utilize both as a first-time home buyer. They both have low down payments. One requires a higher credit score. The other one doesn't. So those are your two great options to go by. 97% of the United States is on an FHA loan. So don't worry about that. You can don't be intimidated by that loan program.
And to also clarify, it is possible to purchase a home with a lower credit score.
Absolutely.
With the FHA program.
Correct. So the minimum credit score required for FHA is 580. Okay. Now, it's not just 580 and then I could have late or I could have bankruptcy and things like that. So as long as you haven't been late on your credit score, some people have a 580, they don't have enough credit on it. So those things have to coincide with one another. But as long as you have a credit score of 580 or above, you can qualify for an FHA.
Okay. And then as far as that, how would someone prepare themselves for going to purchase a home? What are the things that they need to look out for or avoid during the process to help themselves?
Yeah. Great question. So it's kind of like what you did, right? First things first, like, hey, Sunny, I'm wanting to buy a house. What are the next steps I have to do, right? First things first, go speak to a loan officer, go speak to a mortgage representative, have them run your numbers, okay? Those are some things that they can be able to tell you details of what you need to work on, right? So, for example, as a self-employed client, you want to know how you file your taxes just so you're prepared for your purchase. And also, even though if you do have a 580 credit score, you want to make sure that your credit report is somewhat clean, where there's no lates, there's, all that type of stuff on there. And it gives you time, if you need to build your credit, we do something called a rapid rescore. and we can be able to tell you what exactly you need to do to get there.
I love that part.
Yeah. And it tells you.
It's a really cool
And
system.
I always tell people, they're like, oh, I'm going to go to see a credit repair. I'm like, no, don't do that. We could tell you. Because sometimes doing a credit repair is completely different on a mortgage perspective. Some people say, I have medical bills. Medical bills on an FHA loan, it's okay. They don't care about that. But they do care if there's something late on your car or your credit card. Because if that's the only debt you have and you're late on it, it hinders it kind of, right? So the first step is to kind of go speak to a loan officer, see where you stand, seek advice, and don't be intimidated by that. So I'm proud of you for doing that.
Definitely. I mean, you have to, I know that everything that you do affects, you know, your credit score. And then if you're in a process of being accepted for a loan, or even after, I feel like I've heard stories when you're accepted and then you do something and they reject it at the last moment.
Oh my God, yes. So there's a stage, there's two stages sorry guys. There's two stages you go through. There's a pre-qualification and then there's a pre-approval. Pre-qualification is somebody doing an online loan application and them putting in their numbers, right? Versus a pre-approval is send me your pay stubs, send me your W-2s, make sure you have 2 years of employment, make sure your salary is consistent. That way the loan officer has reviewed your information accurately, and it gives you a more smooth process once you find the home, you know? So sometimes the file goes to underwriting, and the underwriters check your 7th grade locker number. I promise you that.
My gosh.
So it's like when you go through the underwriting process, sometimes what you filled out on the loan application can be completely different from what your pay stubs read, right? So that's where sometimes it could say, well, oh, sorry, you're denied. So it's very important for your loan officer to review everything. So,
and for you to be thorough too and honest with what you're claiming or saying that you have.
Correct. I always tell my clients, I'm like, treat me like your attorney, because if you can't tell me now, we can't fix it now, because once it's out of my hands, it's out of my hands. So be straightforward. Yeah, definitely.
So back to the credit score thing, because I feel like that's, at least in my circumstance, that was the biggest focus or the biggest thing that I needed to work on. And I think you gave me great advice as far as what I should do now. So I wanted to ask you that here on the podcast so that other people can also know what are those short-term things that I can do to help my credit score right now if I am if I do have a short period of time to move into or buy a house. Yeah.
So a lot of the things is you want to maintain consistency on your credit report, right? In your case, it wasn't bad, but there was some inconsistency on there. And what we advised was to say, hey, at least to maintain a 2 to 3 months consistency on it, you will see your credit score jump higher in a certain amount of days. So once you have that, you don't want to have any lates. You want to try to avoid that to the best of your ability. If you've had bankruptcy in the past, make sure you have it's been 2 years. With an FHA loan, if you have bankruptcy, you have to be discharged within 2 years, okay? But most importantly, on a credit report, you have to pay just on time and have that consistency for 2 to 3 months. And then you'll see your credit score jump up.
Okay, and then as far as having a low credit score, sometimes it's good to have someone co-sign for you. So what are the possibilities there, and how does that affect me?
Definitely. So you can have mom, dad co-sign on there for you, okay? Sometimes if they have income coming in, let's say, for example, if they have income coming in $5,000 a month, but then they have monthly debt that's almost $4,000 a month, right? Sometimes it may not even be needed to have them co-sign.
It doesn't really help you.
It doesn't help you because your issue may not be the income. Your issue just may be, hey, I need to just work on the credit score. But absolutely, on an FHA or a conventional, you can have a co-signer on there.
And for the down payment, is that something that can be gifted to me, or does that have to come from me, or how does that work?
No, yeah, absolutely. Great question. So it can always be gifted. Okay. Mom, dad, brother, sister, fiance, anybody could gift you that money. Okay. For you to purchase your home for down payment and or closing costs. So that can help you as long as it's an immediate family or fiance, some sort, right?
Right.
So that can always be gifted to you.
And as a first time home buyer, in my case, FHA, what type of homes should I be looking into? What should I have in mind when I'm speaking to my realtor as far as the properties that I should look for?
That is a great question. So a lot of people say, hey, I'm going to just look for a condo, right? Because, oh, it's not so much money. Condos is a huge no-no on FHA. Unfortunately, state of Florida has a huge restrictions. Lenders don't like condos here in South Florida, period. So you want to stay away from condominiums. Mostly villas, townhomes, single family homes is what you kind of want to look for an FHA loan. Those are very important. As a starter home, townhome, it would be ideal, right? You live in a home for about 7 to 10 years maximum, and then you're off to your journey. You get married, you have kids, you want a bigger home. So definitely don't want to look at condos, but you want to look at townhomes or villas and or single family homes.
Okay. And then the purchase price of the home. I know that that's not the only thing that I should be taking into consideration when I'm shopping. So what else should I be looking at?
Very valid question. I like that. So sometimes the purchase price does not affect you on your qualification, but the monthly payment does. And the reason why is because the monthly payment incorporates your property taxes, your homeowner's insurance, and then you have mortgage insurance, and then you have your principal and interest. So if you find a property that's $400,000, but the taxes on it are $10,000, that's almost $1,000 a month that you're paying just for taxes. And the reason why it works like that is your purchase price is divided into 30 years versus your property taxes and insurance is divided into 12 months. So that right there can hinder how much you can qualify for and what your monthly payments would be. You could find a home where the taxes of a purchase price is $500,000, but the taxes are $3,800.
Yeah.
So that can help you a lot too to qualify. So those are very valid points and huge factors in what your monthly payment will be.
What I can actually afford.
Correct. So that's a great question. So you want to take a look at that.
Awesome.
And to reflect on that, I always say once I pre-approve a client, I will say, hey, this is your maximum purchase price right now. But if you do find a home and you really love it and you want to place an offer, give me a call and we'll go over the numbers together to make sure what you're in for when it comes to the monthly payment. So
Okay.
that's something you should consider too once you start shopping.
Okay. And then now I am looking for, now my option is the FHA route, but am I able to then do a conventional loan later down the line once my credit score is in a better place and I just have a better history?
Absolutely. So what I meant to say earlier was 95 or 97% of United States goes in on an FHA loan, right? They go in because they at that point they're in your situation, lower credit score, they down payment is less, but in the next 6 months or a year they say, wait a second, my property value went up, my income went up, my credit score went up. I need to get out of this mortgage insurance that I pay every month. At that point, you can always refinance. Okay, you can refinance yourself into a conventional loan. And what a refinance is paying off your current loan and putting it into a brand new different loan. It's not the purchase price you purchased for. It's only going to be the loan amount that you have left over that will be refinanced to a conventional loan. And like that, you can save money. The rate might be lower. You don't have mortgage insurance. And because your credit score is better, you get a better rate at that point.
Right. And at what point, or let's say like at what credit score number should I start looking into doing that?
So the best deal that you can get right now, obviously, if you're going 800, yeah, it's like here's a loan, right? But you want to at least have a 720 or above on a conventional. Okay, it's ideal. It's beautiful. Get a better better interest rate on it, and you also have to keep in mind your debt to income ratio. So the maximum debt to income ratio is 50% on a conventional. And what that means is your income versus your debt. But at that point, if you have a credit score of 720 and your debt to income ratio is, let's say, 49.99, you still might get a good rate because your credit score is pretty decent, right? But if you have a credit score of 700 and your debt to income ratio is so high, it may not even be worth it for you to refinance at that point.
Got it.
So it's in credit score today is key factor.
Yeah.
It's huge.
I wish I would have known that
I know.
years ago.
Yeah, no, but that's how you came to me, right? So it's okay. We always start somewhere. You know, you always got to start somewhere. So.
And so I have a question that actually came up earlier this week in my head, and I was like, oh my gosh, I have to ask Sunny.
Yeah.
Now that I am in the process of looking or, you know, getting approved, what am I able to, what was the question? Now that I'm looking for a home through FHA, and my credit score obviously being the key thing that I need to work on, is it pertaining to the debt to income
Correct
part? Is it just not advisable then to open any other lines of credit during this time? Or, you know, is it a good idea to open another line of credit, even if it's not being used, just to increase that credit limit and have it not be, you know, does that help me with my debt to income basically?
No, I get it. It's a very good question. Thank you for actually bringing that up. No. Sometimes opening a new credit or a new line of credit can extremely hinder your credit score. But what I do advise, if you have a credit card currently that is open, you might want to call them and say, hey, can you increase my limit? So like that, you have more leverage to say, hey, I owe them 500, but I have a credit limit now of 1,500. I have more utilization. So that helps more.
And also being added as an authorized user.
Good job. Yep.
To someone else's card, mom.
Yeah, especially mom, right?
Yeah.
So if mom has immaculate credit and mom has a credit card that has been open for several years, yes, have mom put you as an authorized user. That helps a lot too as well. Yeah, definitely. But sometimes just calling your current credit card company and asking them to increase your limit is great. Yeah. So that's a very good question, because people are like, oh yeah, you know, I'm going to just open a line of credit or get a secured credit card. No, sometimes doing that can hinder it. Now, in the long run, yeah. But if you're currently looking within 3 to 6 months, I don't recommend that.
Right.
Yeah.
Okay. So do you have any other additional advice or tips or words of encouragement for anyone else like you had for me?
I know.
That wants to purchase a home but just feels like they can't, they never have, or that they're not in the position to do so?
Yeah, I always tell my clients, it's not that you don't have a loan here. You have a loan here. We just got to work to get there, right? You're never denied, but we have work to do, right? So don't give up. It's about staying focused and consistency. And that's just a life experience too. You know what I mean? You want to stay focused. This is a goal that you have. Don't get discouraged. You know, you started somewhere, and I respect that because you have goals. So it's like, now you know what to do. Now you know what you need to file on your taxes, and you go from there. Whether you buy in the next 3 to 6 months or next year, but you have a goal.
Yeah, I'm setting myself up basically. And I mean, I feel like at the end of the day, whether I'm buying a house or not, these are things that I need to know and do anyways. So.
Absolutely. And like that, you can set yourself up for the future.
Right.
You buy your house for in the next 6 months, and you move on. You get married and you have kids. Move on to get yourself bigger. Now you know what to do.
Right.
Yeah. So I'm proud of you.
Thank you.
I'm excited
Thank
for
you for your help.
Yeah, just stay focused.
Yeah.
Stay focused. So that's it for today's episode, guys. Thank you for joining. Rachel, thank you so much for coming on to the show.
Thank you
had
for
some
having me.
great, yeah, absolutely. You had great questions, so I really appreciate that. Thank you for sharing your journey with us. So thank you so much. So ultimate goal is, guys, don't give up. Seek out to your loan officer or give me a call. I'll be more than happy to go over all that with you. Start somewhere. So like this, you have a goal set in mind. Give me a call if you have any questions. Link in bio.